Hey folks, Dan Frio here, the Mortgage Update. Today is July 31st, 2020. Okay, this is the rate update, basically for the month to conclude out a crazy July. So we're going to go through it, what rates are doing, the MBS market, that's why you follow me, what mortgage rates are going to do, what they did. We're going to track back what the Fed's doing. And I'm going to give you kind of what I think is going to happen because we're hitting a lot of triggered areas where I think we're going to see some resistance. But this Corona thing, if it keeps blowing up like it does, I mean we're in uncharted territories now. I don't see how much lower things can really go. Can rates go a little bit lower? Yeah, maybe. But again, I always say this, and I know it drives you guys nuts, but pigs get fat, hogs get slaughtered. I have people, and I'm not kidding, I have people at 5.5% rates, and we're getting them rates in the twos, saving $200-300 a month, $400 a month in some cases. And they're like, and I might just wait. What are you waiting for? I mean, really? Let's say I do it. And you might have, let's say, max out $1,000, okay? And $1,000 is $1,000. But in almost every case, you're going to skip at least one payment, maybe two. So let's say you skip a payment. That payment's $1,500. I'm not saying that equates out to the $1,000 you spent because it's truly not apples and apples. But you're skipping a month. Then your payments go down $200-300. Let's say $250. After 4 months, you've recovered all your costs. Rates go down even more. Your credit score improved. Other things happened. Come back to me, and I'll give it to you. I'll send you in writing. If your rate goes down at least 0.5%, and that's basically the trigger point where it makes sense to possibly do in some cases. If you owe, and it's no disrespect to anybody, but if you owe $75,000 on your house, God bless you. But 0.5% in the rate really isn't going to do anything for you. I mean, it might save you a little bit of money. Our average loan's about $300 to $350. In that case, you're saving a good amount of money. And again, a lot of times what we do is we change your term. If you're out there doing well right now, you're blessed. And, so go with it. We can either do a few things. You might be saving some money. Let's say you're saving $200-400 a month. You might have kids going to college. That $300-400 a month is going to come in handy. Trust me, I'm there. Let's say I'm comfortable paying the payment I got. So let's look at maybe reducing your term, even if we can cut off 5 years. Let's say you're not going to be there for 25 years. It's more money though going to principal, so you're driving down your balance quicker. So I'll get off of that, but please. If you're at 5 or 6% rates, and trust me, I got stacks of them here. People asking me my opinion, then I go back to them. They're like, you know what? I'm paying PMI. I really don't want to pay PMI. Well, the PMI payment's $50. You're at 5% now. I'm giving you 2.875 with PMI of $50. You're still saving $230 a month. You make the decision. So that's it for me right now on that part of it. So let's get to what's going on in the markets. So this was a interesting article that I just came across in CNBC. This is the federal funds rate. What do you give a crap what the federal funds rate's doing? Honestly, what does this do for you? I always look at this, and in those who spoke with me in the past, I would say, here's what I would do. So do you really care, about all this stuff going on other than how it's affecting you? You might say, yeah, I really do. Well, most people, and I hate to say it, we're all selfish. And what's in this for me? And that's the way to look at, a lot of people look at this. That's just the truth. What the federal funds rate does, and why I'm talking about that, I'll get to this in a second, is it is basically interbank lending. So this doesn't affect you truly at all. However, it does have a trickle effect to other pieces of the economy and other different rates. It does not have a direct correlation. So, for example, when the Fed went from up here in 2008, when the federal funds rate was 5.5, 5.25, and they dropped it all the way down to zero. Mortgage rates didn't go to zero. They kind of eased down, but this doesn't control mortgage rates. A lot of times it does have effect on treasuries, the prime rate, coffee rates, and that's different. I won't go into different things. There's a whole variety of different rates that trigger different pieces of the credit industry. Car loans, credit cards, home equity loans, and things of that nature. So the best thing I can say is there is a good article in here, and anybody that follows me, and I apologize, I forgot to do it this week. On Tuesdays, I try to do a mortgage analysis on what my rate is compared to basically all the other lenders in the country, or I try to grab it in a broad stroke. But the biggest thing in here was how most people, or a lot of, well, I'll say homeowners, can take advantage of this. Right now, the biggest thing is, refinancing your loan. So let's go down the avenue of you're doing well right now. God bless you. So why don't you do this? Why don't you do something financially that makes sense and look at refinancing? Just look at it. Just appease me in that section to do a few things. Do you have credit cards? And are they at, 10, 15, 20%? Maybe you want to look at paying those off. You have kids in school and it's, you have tuition bills. You have a lot of equity in your home. Do you owe $20,000 on home equity or student loans at 6-8%? You might not have any other debt. Awesome. Look at possibly refinancing and doing one of two things. Like I said just before, saving each month or cutting the term of your loan. So those are the best areas that we want to focus on. So this was basically an article saying, the federal funds rate, what it does to affect you personally with credit cards and a bunch of other things, but it has no direct correlation. So it even says Feds keeps rates near zero. It's good for borrowers. Here's what experts are saying. They're saying, refinance if you have a home. If you're in a bad situation, your pay got cut. I have a lot of family that took a 10, 15, 20% pay cut. Refinancing, skipping 2 mortgage payments and having your payment go down $200-$300 a month helps huge. Okay, so that's the areas that we want to focus on there. So let's get on to what's happening in today's market, and I'm going to show you some resistance areas that I think that we are going to hit. I'll just leave it that way. So right now, the MBSs are up 9. The biggest thing that came in was great news for all of us. Is the inflation index. If you guys follow my channel, I normally follow inflation, GDP, unemployment, gold, what the stock market does, what the other treasury bills are doing. There's a whole freight indexes, which a lot of people don't focus on. I focus on all these things to give you a broad spectrum of saying, okay, there's 8 indicators we follow. If 4 are good, 4 are bad, we're neutral. If 5 are good, 3 are bad, we're okay. If 10 are bad and 0 are good, you better be careful. Okay. So what I'm getting at is the Fed, one of the things that they're doing right now, they're actually the biggest contributor of buying mortgage-backed securities right now. So they are the one biggest piece of this puzzle on what's buying bonds, who's buying these bonds. You just saw it move too. These are areas where, I'm going to address this right now. Remember, if you've talked to me in the past, I say, we're not locking in your rate right now. Why? I'm trying to find a dip. You'll see, watch this as we progress through this video, just during the 5 minutes you're on here with me, what this is doing. So it's like your stockbroker. You're saying, hey, I want to buy that stock at, $99. I don't want 100. Is it possible? Yeah, it might be possible. That's what I'm trying to do for you. If I say, I'll get you a 2.875 rate. Basically what I'm telling you is then you get your disclosures and it's 2.875, but you're floating. What floating means is I haven't locked you in yet. I always say, I will promise you, I'll give you a 2.875 or lower. Leave it in my hands, please. I'm promising you, you're going to get that. I'll send an email, put it in writing. If the market takes a turn another way, I'll eat the cost to make sure you get that rate. I can promise you. So one of the big indicators the Fed is watching right now, and again, the Fed is one of the biggest buyers of bonds right now, especially mortgage-backed securities, is inflation. And the inflation number came in perfect today, exactly where we wanted it to be. Couldn't be more happier. So that gives them room to say, you know what? We can do this monetary policy. We can continue to buy mortgage-backed securities. We can continue to keep stability in the markets, and we don't have to worry because inflation isn't running out of control. Inflation is the biggest fear of the Fed. That's their number one fear because they're trying to curtail that and keep it at a range. They don't want it to exceed 2%. And we're at 0.8 right now. So things are awesome right there. We're here. Now let's go to the trend lines. Again, those that follow me, we follow this. This is a mortgage-backed security prices. The price of a bond. The bond is a batch of mortgages. This factor here determines the mortgage rate. This is the tool right here. If you go back to here, this was kind of concerning to me. Even analysts through here don't really get this right. If you look down through here, and I'll try to blow this up a little bit. It says, where is it? How do I just want to read this? The company, the Fed, and inflation all have some influences over long-term fixed mortgage rates, which generally are pegged to yields on the U.S. Treasury. No, they're pegged to yields on the mortgage-backed securities markets. Trust me, I know. This is what I do for a living. You have a lot of these people writing articles. I can even walk around my office. People that have been in the mortgage business for years, they still follow this number here. Is there a correlation? Sometimes. The clock, your clock is at this, it hits a specific, what's that saying? Your clock is right one time of the day, whatever. So you get my point. So what's going on right now is here's levels that I follow internally, and all the economists and everybody who monitors this market, we follow. Here's ceilings, and there's a new ceiling is being created. This is a ceiling right here of that where we have been. A new ceiling has been created, which I kind of expected, or I did expect. I'll put it that way. But you can see these ceilings play a huge role in technicals. And believe it or not, the stock market, bonds, and everything, it's probably more technical than you'd think of. There is supply demand, but there's a lot of things in the background, computer-wise, that control a lot of these things. So we hit this level here. We hit it again here. If I bring the chart back over here, we hit it that same level back here in March. We hit it again here. We hit it basically here. We hit it here, and we exceeded but ended the day at the mark. And then we popped out yesterday, which created another ceiling. And then now we're in uncharted territories. The other lines here are averages. Now, let's just, for example, let's just throw those out right now, because the world, we are in territories that basically we've never been at. So let's just follow this for now at the technicals. We exceeded that technical. So could rates or the prices continue to rise? Yeah. But this technical, I think, is going to play a barrier just like it did through here for at least a month or so. So I'm thinking we're going to get a little retraction or a little resistance right here. Could I be wrong, especially with today's inflation numbers? You betcha. Okay. On the flip side of that, rates. A lot of lenders are not doing anything with rates. That is how people control, or banks, I won't say people, companies control the flow of their business. If somebody's slow, they reduce rates. If somebody's really busy, they increase rates. There's a lot of financials behind it. There's a lot of servicing companies right now that are in major trouble because of forbearance. And I'll go through that in a second. I apologize. This is going to be a lengthy video, but I want you to get it, especially realtors out there, mortgage people out there. If you're a consumer, it's amazing to me, and I think it's so cool that so many people reach out to me and saying, I watch your channel every day and it's awesome. And I've closed their loans already, but they just have some reason they have a passion for this stuff. So what's happening is the forbearance in the market right now, and I'll explain that in a second, is playing huge havoc in the market. And you're going to see the primary news today is forbearances continue to climb. Now, what is a forbearance? Well, forbearance is, and I'll just kind of explain it to you in layman's terms. Forbearance is this. It's the lender going out to you and saying, you know what, you can postpone. I guess that's the best word I can make. You can postpone your mortgage payments. I didn't say they're forgiven. I didn't say skip. I said postpone. Okay, so what a forbearance does is it comes out and says, you don't have to make your next 3 mortgage payments, or you don't have to make your next 6. I saw a video last night and it kind of ticked me off. You don't have to make 12 mortgage payments. Well, yeah, you do, but they can be postponed. I don't like to say, you're not paying, you're basically, it's being eliminated, or you don't have to make them. The bank makes money by lending you money and you paying them back. That's the truth behind, that's the business. So if they just said, don't pay it. Well, they're not, these companies, especially the big banks, they're hitting record profits all the time. You think they're doing things for your benefit? No. So what's happening is the forbearance part of things is saying that you don't have to make your next 3 payments on time, but on that 4th month, you need to make all 4 payments. So there's 3 different variations of this. There's one saying, okay, you can postpone those 3 payments and make a payment right at the end. The 4th month, you need to make 4 payments. So let's say, for example, you don't pay August, September, October. All right. November, what's required is you to pay August, September, October, November. You're going to have to make 4 payments. The next thing is they'll let you kind of push it off till the end of the year, and then they'll recast your mortgage payments in 2021 to make up the difference. So they'll take all the payments you missed, add those up, divide it by 12, and add it to your new payments for next year. Then there's another version that throws the balance at the end of the loan. So you pay for 30 years, and then you still have a deficiency balance. Or if you ever look to refinance, 3 years go by and you're like, I owe 150 grand on my house. Then when we try to refinance you, we find out, oh boy, you owe another $5,000-$6,000 because you missed all those payments back then, remember? And you're like, shoot, I forgot about that. So there's a variety of things. And then there's one last thing, and it's, please don't do this one unless you really, really, really have to, is they'll modify your loan. And that has played havoc in the whole economy since 2008 or 2008. So basically, the lender's coming back to you and saying, okay, we'll work with you. Basically, we'll rewrite your whole note. And here's what they do. They'll probably recast you to a 40-year term. They might have a deficiency balance at the end of that as well. But they're going to say, we'll save you $100. Your rate right now is 4%. They won't talk rate. They'll say, your payment right now is $1,500. Well, we'll refinance you. You can skip 2 payments, and your new payment's going to be $1,100. Isn't that fantastic? Sure. Well, the fine print's going to read, your rate now is 4. Your new rate's going to be 7. You owe 20 years left on your mortgage. The new mortgage is 40 years. And then there could also still be a deficiency balance at the end. So please, don't do the modifications unless you really, really have to save that house. So that's the word of wisdom I have for that. So that's where we are right now. Sorry I rambled. It is Friday. I know you probably want to get out of there, but I'm looking at, right here, even though rates or the MBSs are up, most lenders have not adjusted their rates. And if they did, it might be in a variation of like 0.1. So if we locked you in here, my rate honestly is right here where I locked a lot of people is still the same today as it is here. However, if rates do plummet, we sometimes have the ability to, and I don't see this really happening. If the rate drops over, close to 0.5%, I can readjust your rates, but this move is not 0.5%. It might, in the biggest case, it might be 0.125. So that's that part of things. I don't think the economic calendar's out for next week. I will post that on Monday. So come back on Monday. And I think I figured this out. I finally figured out how to do stereo on my YouTubes. And I did a tutorial last night, learned how to do that. So if you're listening on headphones, you should be starting to hear me as of today in both ears. So if it wasn't for you guys, I couldn't do what I do. So if I could be of any help to you personally, give me a call at 844-775-LOAN. That's 844-775-5626. Shoot me an email at D-for-Dan-Frio, which is Frio, at preferredrate.com. Or you can go to my website. It's therateupdate.com. You can hit here and apply. You can hit here and apply. You can find out more about me, a whole bunch of tools that we have. Any which way you need to do that, I would appreciate you doing that. And if you're in the process of refinancing right now, here's what I need you to do. I need you to, every company will give you what's called one of two things, a loan estimate or a fee worksheet. Send that to me. Let me know what you're looking to do. Give me some specifics. Like I got 3 or 4 in just within the last hour saying, Dan, I'm in Texas and I'm at 4.75 right now. It's an FHA loan. I don't need any money or anything. And I really just want to try to save some money. All I need from you is send me that and a mortgage statement. And so I can get the gist of everything that you have. The missing element that I need, though, in a lot of these is what's your credit score? So either give me what you think your credit score is, or go to sponsor the show, the credit scores, plural, creditscoresandmore.com. Click step 1. It's free. There's no catch. Trust me, there's no catch. If it asks you to subscribe to anything or whatever, don't do any of it. They hate me for saying that, but whatever score it gives you, just tell me, hey, I got this from your website that you were recommending. It's saying my score is a 733, and that's what I'll base everything on. Will that score be accurate? Could be. It might not be. There will be variances in that, but at least it gives us an idea where you're at. So that's what I would suggest you do. If you haven't started anything, please just email me a copy of your mortgage statement. Again, tell me what you're looking to do and say, Dan, here's my credit score. It's here's what I think it is. And believe it or not, your credit score does play a big role in all of this. So that's that. If you're looking to buy a house, which millions and millions and millions and millions of people are doing right now, they're taking advantage of a great environment, especially with rates. Please just reach out to us. The easiest thing is just go to website and just click the pre-approval in there, filter through it. If it's during office hours, I promise somebody will probably be with you in a half hour and go through all the details with you. And we'll kind of pick your brain because we want to educate you guys. I don't want to just be, take all this information, click, and fly you through. And then you get to the closing saying, what in the world is all these numbers? Why is this and why is that? I want to educate you through this process because education is power. That being said, TGIF, that's it for me right now. God bless you guys. Take care. Please don't forget to give me a thumbs up. If you would, subscribe down below and share. Hit the bell so every time I do post a video, look at the title or topic. If it's something you want to watch it. If not, just pass on by. So stay healthy, keep safe. God bless you. And if I could be of any help, please don't forget to reach out. Take care. Bye-bye.